Today is 8th of May, market trade a reversal bar, down 70 point at 3848 with above average volume. Over here we have very strong rally after this sell down, and I mentioned before, usually we are likely to see increase in volatility, but here we are a bit of a surprise. After a slight pullback, it managed to actually bounce off, but this is generally a weak bounce, as evident from the small body and the fact that today we trade a reversal bar on increased volume. This is generally not a good sign. Support is at 3,800. This is crucial, failing which we may see further downward move. Our immediate resistance is at 3,900. Now if you plot the major moving average to understand the context, now this rally managed to recover above the 200 days, which is important, and the 50 days itself act as a resistance, and we see this pullback managed to actually move above that. Right now it provides some level of support. The fact that 50 days is downward pointing, it doesn't inspire confidence. So going forward, we'd like to actually observe to see what happens. If we can just hang sideways, hold above 3,008, that will be positive. Otherwise, breaking 3,008 will be negative, and it may move down to test the 200 days again. This is S&P 500. After the severe sell down, managed to find support and bounce off, but technically this is a counter trend move. Looking at the major moving averages, it's now challenging the 200 days. This 200 days has been respected in the past, and it's important and it's crucial to actually watch. If it's not able to hold above that level, we're likely to see further downward move. Now 50 days likewise is actually downward pointing, so this generally does not inspire confidence. Nasdaq itself, we have much negative picture, but by and large it's actually quite similar in patterns. After severe sell downs, we have a rally. This is a counter trend rally, and it's approaching this 200 days, which act as a resistance, and the 50 days moving average is generally downward pointing. Over the last couple of sessions, it trades small body, so generally this is something we'd like to actually observe to see whether it's able to actually move upward and test this resistance and eventually test the 200 days. Now the small bodies does indicate a losing of momentums. This gap here provides some level of support, and it's important that it actually hold. Failing which, and then from here we may see further downward move. This is Brent crude. As mentioned previously, $71 is an important support, and it was actually broken, and we are likely to see a classic throwback, and this is what happened. And now the $70 and $71 act as a resistance for any upward move, and we notice actually shy of this level, you actually move down and test this low here, which provides some level of support at about $58. The recent move itself is actually generally weak, so again we may test the low again, and it may even break this given the catalyst. OPEC has actually indicated they have increased supply, and this is generally does not bode well for the Brent crude price. 10-year treasury yields remain elevated, so this is generally negative for the REITs and capital intensive industry. So if it remains elevated, it's better to stay away from those capital intensive industry. Let's turn our attentions to the local stocks. This is Centurions. Yesterday the stock actually went ex-div, but managed to actually move from the low, which is positive. And at this point in time, we have a small deeper setup. Bar high here is at 128. So far the last two bars itself, the volume are very low, so this is generally a sign of strength. OKP stock went ex-div today, so you notice there is a gap. This is a dividend gap, so whatever the case may be, this is really part of a consolidation patterns. So I'd like to wait for it to complete and eventually take out this level here of 664. Bank United The stock is actually strong in the sense that when they go XD, we manage to trade in positive territory and move upward very decisively. However, volume is actually quite thin at times, so you need to be careful if you trade the stocks. Today you trade inside day on low volume. Look for eventually break above this high here of 725. Oitech. Stock went ex-div and ex-bonus, and it trade a extension bar on extreme volume. Now, at this point in time, it's very difficult to identify the setup. What we can do is to identify the high volume area. So the high volume area is at this level here, and this is at 525. So we like to look for a decisive break above this level. Breaking this, we can actually go long. This gap here provides some level of support. It is important that you actually trade above this gap. Turn attention to the bank stocks. This is DBS. Today it released the result. There was initial upward move, but unfortunately unable to close well. So this is generally negative. And as mentioned, this is quite similar to STI index. We have a series of small bar. This really does not inspire confidence, and it coincides with this resistance. So a downward move is actually quite likely. So we just have to closely watch. OCBC. Again, generally lackluster. Today trade a doji. So this may well just continue to trade sideways, and we just need to exercise some patience until the direction is clear. Likewise for UOB. So the banks generally exhibit quite similar behaviors. So again, after a bounce, it's actually now trading generally sideways. I think the better bets are Singtel and ST Engineering. Let's take a look. This is Singtel. Managed to actually move up very nicely, and today managed to actually reject the low and close near its high, which is good. This is a small dipper setup. Bar high here is at 388. Mentioned previously, after this run up, we prefer the stock to trade sideways, and this is what we have seen. And managed to actually stage a breakout with a gap, and right now experiencing pullback. ST Engineering. After this break, stocks was actually trading sideways. Now I would like to see the stock eventually take out this wick, which is at 761, and any move above this level, we would like to see an increase in volume. Sembcorp is quite evident from the chart itself is weaker than ST Engineering and Singtel, because it's still trading below this resistance level, and so we just have to exercise patience and look for eventually break above this level here of 670. Keppel Corps has very nice run, but it's approaching very obvious congestion area. So if you notice after the setup, it actually has very nice run, and the pullback managed to stage a break on the upside, but it's approaching this congestion area. So again, we just have observed that it's no good at this point to trade the stocks. We certainly do not want to take its trades with immediate overhead resistance. SGX will be better in that sense compared to Keppel. So you notice very nice run up, and then been consolidating sideways. Look for decisive break above this side here of 1480. SingPost managed to recover, and right now challenging this high here, and this is at 63 cents. We'd like to look for shallow pullback above that level and look for a break on the upside. Let's discuss stock Sheng-Siong. This was detected as a swing trade. Over here we can see the pullback, and this is a big dipper setup. It broke out and makes successive high with increasing daylight right now. Look for pullback and look for setups to go long. The only property stock perhaps worth watching is Hong Kong Land. Move on its own merit. The sector is actually generally weak. Very nice break above the resistance, followed by an inside bar. Look for a break above this high here of 514.